How's it going? Ryan here. And today I'm going to review the one trade that I took on SPY. Happened to be a smaller winner, I think somewhere around 15% return. We'll dive into that trade in just a second, but first I want to start on the daily time frame here, look at some of the levels that I was watching. We'll kind of go through, I'll explain why I was watching, what I was watching, and then we'll get into the trade itself. But here we have daily time frame, as I mentioned. At the very bottom here we have this 440 level, an area that acted as resistance when we were below it, support when we were above it. It's also a nice whole number. We have 442 for similar reasons, but that was drawn on the hourly chart, so we'll dive into that in a second. We also have this 442.74, which is the low of this candle, which is also the low of this recent pullback. So if we're looking at the overall structure of the market here, you can see we had this big sell-off, right? And we made this low. From there, we made a higher high. This is a higher low. We made another higher high, and we made this as a higher low. We've made a lower high, and we have come down to test this recent low, so this recent swing low. So that's important because if this breaks, this series of higher highs and higher lows is broken. It's no longer relevant, and then we actually have changed into a downtrend where we would have this high, this low, a lower high, a lower low. So we have the potential for a trend change here for the first time in weeks. So that's why that level was important to me. I wanted to watch that. Once that breaks, especially with this higher low that we put in, that will be a trend change from the uptrend that we had. With that being said, though, those are the daily levels. I'll dive into hourly. So hourly, this 442 came from hourly chart. You can see it was the high here, low here. Just some confluence. It was a peak and a bottom. So a peak of a big sell-off day, the bottom of a huge rally day, and it's a nice whole psychological number. So we're watching that. Additionally, we have some of these supply and demand zones. So this is something I'm going to incorporate more into my trading. I usually just do levels, but levels are never 100%, right? It's sometimes you get them down to the cent, and you always kind of approach levels knowing that it's not a 1 cent tolerance. Perhaps you might have a 20, a 30 cent tolerance, and that is reflected better in a zone. So there's plenty of videos on how to determine and draw supply and demand zones. I'm not going to necessarily go out over that, but I think you might be able to catch on just by looking at this. Starting back here, we have this zone. It was the high of a couple wicks before we had big sell-offs. It was also support in here. This is between 441 and 441.2, essentially. As I zoom out here, we haven't retested this, I guess, in the post after hours we did. But we haven't come back to retest this zone, so that's still valid. That is a zone that once we rallied out of, it was resistance, cleared above, support. We haven't come down to test it, so that's a zone that we could watch for potentially, especially if we break this 442.74 and potentially head lower. That would be something that I'd watch for. We also, and I drew these on the 30-minute chart, so it might be more relevant to peep that. All right, but let's take a look here. Another one that we have is this zone between 442.74 and 443. So about a 30 cent range, 25 cent range or so. This was also the low of this day. We wicked down into it and rallied out of it. You can see we had quite a big move to the top out of that. We also have this zone between 445 and 445.37. So 445.1. So about 25 cent range. Again, this is an area that we had some support. We broke below it on Friday's sell-off, came up, retested as resistance, continued that sell-off. Almost got to it today, but not quite. So that's another zone we're watching. We also have this zone up in here between 448.2 and 448.6. Similar reasons. We touch it, resistance, touch it, resistance, get up above it, acts as support. And And then we just have this recent swing high up here, just kind of the high of that day. We also are watching the high of Friday's day and the low of Friday's day, represented by the red and green levels. And then we have the high of the pre-market here in that nice gold color there. So that was a lot. I apologize, but that's what I was watching. Those are the zones I was watching, just areas relevant to where we were. We'll hop into the 5-minute time frame because I trade off the 5-minute time frame and it's not letting me zoom in. What's going on? There we go. Alrighty. So right off the open, the first thing I noticed is we held this area, right? There's essentially 3 things here that I was watching. A big area confluence. We have that support from the daily time frame, that swing low. That's at 442.74. We have this red line, 443, essentially. That's Friday's low of day. And then we have that little demand area that's drawn from that low of day as well. We held that, pushed up, sold back down into this area, held it again. I entered calls here. Here's the thing. Generally, when you're within the previous day's trading range, so when you're within the high and the low of the previous day's trading range, you can experience some chop. Usually, it's a break out of the previous day's range that will provide you with a trend, higher volume moves, more clear price action, etc. So the reason why I got in here is because this was such a key level for me to hold, or not for me to hold, but for me to see the market hold. Because a break of this does confirm a downtrend. We held that level. We also have this demand zone and Friday's low of day. All these things kind of added up. And when I saw us rip out of this zone initially, come down, test it on very high volume, and then test it again and fail to close below it, I entered calls. From here, we kind of chopped around. Once we got up here, we kept testing, we kept pushing up and then getting rejected. We kept testing kind of the bottom range of this area, right around that 442.74. We rallied up and I sold around this 443.5 level. My target was the pre-market high, and as you can see, if I held, it would have eventually touched that level. However, look at some of this chop. And I understand my stop loss was if we broke down below this area that we had in the pre-market and that we had wicked off of before holding this level. So if we had sold and broken out of this zone, I would have closed my position. That was my stop loss. So why did I get out here if my target was up here? My line of thinking was that we have this zone that we pushed up into and sold off aggressively. That was my first target. I said that this is my first target. Ideal target is the pre-market high if we hold this zone. But I was unsure because we were within Friday's range. We might get some chop. We might have some volatility or just some erratic price action. As you can kind of see in here, we did chop around quite a bit. And especially if you're trading 0 day till expirations, if you're trading same day expiration, you probably would have lost some value in all this sideways movement, especially since it's over the course of about an hour of this sideways movement. So up to you if you want to hold an hour of this and just watch theta eat your contract. I only traded one contract, so I took profits near this area that we rejected from. I did that because I didn't expect clean moves today, and we didn't really get one until later in the day. I wasn't trading at this point, but yes, it did hit my price target. So had I held, I don't trade same day expirations, so theta wouldn't have affected me as negatively here. But yeah, I left some money on the table. I was trading 444 strikes. I got in down here near the bottom. It's a nice move. It's over $1 move, but like I said, we had about an hour of sideways chop, and I got out around this level that we had rejected off of, especially after seeing this candle. This is the candle that confirmed that I wanted to take profits at this area because we had rallied up. Look at the volume here. We've tried to push up towards that high a day and just got smacked down on one of the higher volume candles that we had all morning. So as we started pushing back up, I got out. I just took my profits and said, I don't want to watch this reverse on me, waiting for a clean move that we might never get. So left some money on the table. It was a small gain, like I said, around 15% return. Had I traded 0 day till expiration, that would have been about like a 40% return. So it can be a detriment, but if you get a quick move on same day expirations, you can also get a nice return. Same goes to the downside though. You can leverage yourself into a hole there. So that was the trade I took. That's the rationale. We hold all these key levels off the open. We test those levels, fail to break below it, have a defined stop level where if we break below that, I'm out. Have a defined target or series of targets. Had I had multiple contracts, maybe take some profit here and leave runners. But yeah, overall, you can see we did reach the pre-market high. We broke above it. That pre-market high acted as support. We didn't ever quite get up to this next supply zone. We got very close, within maybe 20 cents, but didn't quite reach there. Had a few bounces. Once we broke below, we retested that high of the pre-market, sold down, not all the way quite to this level, but sold down, and then kind of traded sideways through the day's end. So if you look at the daily time frame, kind of a lower volume day overall, which explains some of the choppy movement that we got, but we held that level. We held that swing low here. With the weakness that we've been showing, especially to the upside, I'm not sure that holds. Once that breaks, you can expect to see a continuation of this downtrend, would be my assumption. With that being said, though, that's what I was looking at. That's the trade that I took, the result. If you made it this far, I appreciate you watching. Thank you. I trade live every Monday through Friday. If you feel so inclined to stop by, please do say what's up. With that, I hope you have a great day. I'll see you on the next one. Peace.